Welcome to the April edition of the My Vellore Village Report. I'm Frank Fallico, real estate broker with the Fallico Group. The first quarter of the calendar year is already behind us, and here are the latest numbers. The average detached home in Vellore Village over the first quarter, rounded up, sold for $1,769,000. This is relatively flat compared to the same period last year. In fact, semis were also relatively flat at $1,149,000, as were towns at $1,162,000. Now, we all know that semis should fetch more than the average town, so the obvious question is why? In Vellore Village, there are a lot of luxury towns with tall ceilings and modern layouts, which is attracting younger, more hip buyers willing to spend more for those features. The current stock of semis, on the other hand, fall mostly in the data category, which is affecting the overall price. The data on condos is also skewed, as many units have not yet hit the resale market, but this will mature as the coming months as more people take possession of those new builds. As we take a closer look at March this year, you can see it's mostly the detached sector that's driving the increase, as year over year, it's up 17% in sales volume and 9% in price. Needless to say, many of those buyers that were waiting on the sidelines in 2023 are starting to enter the market, and interest rates and where they're heading are part of the whole story. In our latest case study, our team dug a bit deeper into those interest rates and how they can impact buyers and sellers and their perspective on the market. What we found may surprise you. In scenario number one, if you purchase a home for $750,000 with a 20% down payment, which is effectively $150,000, the mortgage amount is $600,000. At 5.5% interest rate, your monthly payment is $3,385. Simple, right? Well, in scenario number two, interest rates drop by 1%. Everybody's happy, buyers especially, but not so fast. Now, the price of that home rises to $850,000. As buyers' confidence goes up and flood the market, so does their desire to spend. The new mortgage is now $680,000. So you need to borrow $80,000 more for that same home, and the deposit goes up. So now you got to come up with $170,000. At 4.5% interest rate, your monthly actually goes up $3,430. This is a great example, guys, of how the reality of a lower interest rate can fool the public into buying at the wrong time. My mentor always said the best time to buy real estate was yesterday. The second best time is today. Thank you for watching this edition of the My Vellore Village Report. If you or anyone you know is interested in buying or selling, you can reach us at thefallicogroup@gmail.com. And remember, if you have a local business you think we should spotlight, please reach out to us. The Fallico Group, changing lives one home at a time.